heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Tesla asked its investors to approve Musk's $56 billion pay package again. We discuss the vote on moving to Texas and its criticism of the Delaware court that voided Musk's 2018 award.
Chip-making equipment orders dive at ASML as Europe's most valuable company faces a pullback from its Taiwanese and South Korean customers. Are chip stockpiles back?
And meanwhile, we bring you a key conversation with the CEO of debt-laden Atos as the French IT company seeks to save itself. That and so much more coming up throughout this hour. But let's get your quick check on these markets. And I want to shine a light on what's happening ultimately in the equity market, which pulls back a little bit from where it had been. We're seeing a little bit of caution, of course, as we digest a more hawkish Federal Reserve, as we think about where Jay Powell is really steering us in terms of number of cuts. UBS thinking it'll be 2 for this year, starting in maybe September. Nevertheless, we're seeing actually bond markets continuing to outperform, but not as much as they were earlier, Ed. Currently seeing a 20-year yield just down by about 2-3 basis points. Remember, big auction coming ahead of that all-important beige book as well. And maybe we move it on and have a look at what's happening in the world of crypto, because Bitcoin has actually been, well, on the downside, even as the US dollar is for once falling. Now, after this is the first time in 6 days that we've actually seen the US dollar give up some of its strength as we maybe just digest what has been, of course, an apparent slightly more hawkish shift. Well, we're looking at a Bitcoin currently off by 2.5%. Risk assets still cautious out there, Ed, but what are you watching on the micro?
Tesla continues to dominate headlines and market moves. We're down for a 4th straight session. That's the worst run of declines since the beginning of this year. And the stock is trading at its lowest level in almost a year. And I don't think this is to do with the 2 red headlines on the Bloomberg terminal. I think the proxy revealing that investors will vote on that original 2018 pay package rejected by a court and the idea of incorporating in Texas, I don't think that's the downward pressure. There's indigestion from the events of the last 4 days, executive departures, layoffs, and Elon's comment about going all in on robo-taxi. And I think a lot of people are trying to understand what's happening. What is the big picture and when does it happen? But the stock's under a lot of pressure, while the talk from Elon Musk on his own platform X is fighting talk. And I think we've got some pretty good guests to go through that with.
Yeah, let's talk about the fighting talk. Let's talk about the reaction throughout. Let's start with Bloomberg's Craig Trudell. And what's so interesting is ultimately coming out fighting to Delaware, to the court, to the judge that said initially this 2018 pay package is far too much and you, board, are not doing enough to push back. But I'm interested as to why the argument goes that it would cost billions more to renegotiate a pay package rather than just try and vote through the current one.
Yeah, I do think it's interesting that the board sort of, portrayed this as a nuisance, really. This idea that they would have to take on additional expense, that, the company accounted for having to set up these options and set aside this compensation for Musk, and essentially would have to sort of, do it over again. It does also strike me, just from the language that was used in the filing, that it was sort of Muskian, and that Robin Denholm, the chair of the company, referred to this idea of essentially that the court had taken away shareholder voice. It was kind of a freedom of speech-esque defense of this pay package. Yes. But of course, corporate governance critics are not going to look on this very fondly, this idea of, this award being slapped down and the board just going back to the well with the same plan.
Craig, you've been reading the proxy for the last 4 hours and 30 minutes. I know you have been at your desk doing that. There's some granular detail in it that Tesla explains they ran the compensation program and the idea of reincorporating in Texas in parallel. And my read on it is that they basically don't want to be accused of using the Texas incorporation as leverage in this ongoing pay issue.
Yeah, they want to kind of pair these two, basically get the shareholders backing again, I guess make the case really that shareholders, if they didn't already know what went into this award, the Delaware court just brought to light a lot of these details, made clear what was going on here, and really sort of put it back in the court of the shareholders and say, are you okay with this or aren't you? And of course, we have heard rumblings reported on this idea that retail shareholders were really sort of in uproar, based on just at least the volume of complaints about the way this was handled. Also, Tesla saying in the proxy that 4 of its 10 biggest institutional investors wrote to the company or somehow communicated that they were in support of this award. So there is some reason to think that perhaps this stands a chance of being approved just as it was back in 2018.
It was a lot of dense text to go through. Tesla's down a percentage point, but way off session lows. Bloomberg's Craig Trudell. Great work. Thank you very much. Let's keep the conversation going with Pierre Ferragu, who's head of tech infrastructure research at New Street Research. Pierre, just give me one sentence. What is the story of Tesla right now? Just one sentence.
I'm not very good at doing one sentence, you know that. So the one sentence would be, Tesla is a car manufacturer first, and for the foreseeable future, they need to continue to be successful at manufacturing cars, and that's a platform for them to do additional amazing things. You have autonomous driving. They are the most advanced player in the world on supervised autonomous driving, so your car driving by itself under your supervision. They are making exceptional progress. There is a very long-term, like over-the-horizon goalpost of being able to do robotaxi. It's a much more still challenging thing to get to, very uncertain. And there is also the opportunity to develop humanoid robots on the same technology platform as FSD. And these things will take years, whichever way you look at it. And we know Elon Musk is very impatient, wants to accelerate that momentum, but it's going to take years. And in the meantime, we also need Tesla to see that Tesla is still going to be a very successful car manufacturer, being able over time to stabilize pricing, to continue to gain share with the products they have in the market today. And then in the next 2-3 years, to be able to ramp a large volume, lower price point platform to continue to grow sustainably. And all that should deliver revenue growth and margin expansion. And that's really like the near term. And the longer term is, the BERT and robotaxis.
It was a loaded question, but you did give me one sentence just without full stops or punctuation. That's okay. The reason I ask it is I'm trying to understand in the moment the downward pressure on the stock. And I don't think it's got much to do with the proxy. So of all the headlines of the last 4 days, which was of most interest to you, Pierre?
Of the last few days, the most important headlines I've heard, the most important thing of the last few days was actually to digest well the headlines of last week. And so we've heard, we've read a Reuters report about the Model 2 being canceled and things like that. And we've had hints and indications from Elon Musk and from Tesla's chief designer that the Model 2 is probably not canceled. And so the most important breakthrough earlier this week was this understanding that probably what's happening today at Tesla is that Tesla is going to prioritize developing the robotaxi in Austin for now, because anyway, the Model 2 will need to wait for Mexico to ramp in millions of units. And Mexico is still 2-3 years away. And so in the meantime, producing only 250,000 Model 2s in Austin doesn't really help. It's like a very little help. And so my educated guess is that Elon understood that and thought, okay, let's go all in on robotaxi. Let's get a platform out. Let's have a small fleet on which we can trial, test, improve the technology. And then let's get back to the Model 2 a bit later. So hopefully next week when the company reports, we get a bit more clarity on that. So that was really the big thing of the last 48 hours.
I like the fact that you give us your reasoning, your interpretation, Pierre. Give us your reasoning on whether the stock should be down by a third so far this year.
Yes. So if you look at the potential of the company in the long run, that's a nonsense. Tesla makes electric cars. Electric cars remain, I think, the future of cars. And nobody on earth can make electric cars as good as Tesla and as cost efficiently. And if anything, this gap is widening. I just took delivery of my new Model 3, the Highlander. Like the progress Tesla is making at doing great and very cost-efficient cars is still mind-blowing. So I think it's still a very powerful company, and the stock is vastly undervalued if you look at it in the long run. In terms of short-term developments, I have a lot of sympathy for where the stock is going, has been going in the last 3 months, because Tesla has been hitting a wall in terms of growth, has been forced to reduce pricing a lot, like finding themselves in a situation where they were increasing production faster than demand could increase. So they have to reset the bar, and it's not going to happen over a few weeks. We still have a lot of inventories. Pricing are still low. Demand is still not enough to comfortably absorb the production today. So we will need some time, to get Tesla back on track. And of course, the stock reacting to that is the way the market works. And yes, I have sympathy for that. Tesla is at a low point, is between two growth trajectories, continues to work on long-term moonshots like the Droid and Robotaxi. And in the meantime, like the next couple of years are going to be years of recovery. So ahead of that, seeing the stock weakening makes sense to me, even if I would disagree with that blatantly with the valuation implied if you look at it over like a 3 to 5 year horizon.
Pierre Ferragu giving the short term and the long term. We thank you, Head of Tech Infrastructure Research over at New Street Research. Some of the longest sentences in the House, but we love it. Meanwhile, coming up, tech earnings, they're upon us. We'll dive deeper into what to expect. And the current state of tech markets more broadly, Ed. What are you looking at ahead of that conversation?
Philadelphia Semiconductor Index, or SOX. 27 names in the red, 3 in the green, biggest drop on ASML. The story, chip contract manufacturers are not ordering chip-making equipment. What does that tell us? We'll explain next. This is Bloomberg Technology.
ASML, chip equipment maker, having its worst day since June 2022. Now, put it into context, this is a company that's up about 25% so far this year. Nevertheless, we see a pullback because its earnings really disappoint on the quarter that we've just seen in terms of revenue, but also pointing to this quarter we're already in, saying it's going to be low where the market had anticipated. Why? Well, we're seeing TSMC, Samsung pull back on perhaps some of the orders that we thought for some of their overall chip equipment. Now, this still shows a chip sector that's in recovery when you're thinking of our own purchase of electronic goods. And they're like, but what of the AI revolution, Ed? This is what's so interesting, is the fact that actually their number one market, it's China. Basically, half of their revenue is coming from China at the moment, even though we see those sanctions, those curbs on such very high EUV chip equipment going to China. They can't get their hands on that, but actually there's still relatively strong orders for the lower elements of where that chip equipment has been going, but notably lower on revenue.
The China historically is a big market. The story, the anxiety is about not China. TSMC, Taiwan, Samsung in South Korea. All this CapEx commitment, but they're not fronting up. In the short term, the drop was quarter on quarter, 61% for EUV lithography. Basically, they ain't buying machines that make chips. Why? Let's dig deeper into these markets. Tech earnings season's also around the corner. Ipek Oskar-Dishkaya, senior market analyst over at Swiss quote, there's the headlines. Governments in Europe and the United States writing big checks saying, come and build chip factories. It's going to be great. And Samsung and TSMC gave us better CapEx outlooks for this year. And then we've got ASML and things aren't going so rosy. What was your read on that?
Well, actually, ASML earnings really disappointed this morning in Europe. And that kind of raised a couple of eyebrows regarding the sustainability of the demand growth from chip makers and the sustainability of the AI rally. Now, it's important to note that ASML said that the second half of this year is going to see a rebound, and they actually kept their full year outlook unchanged. But obviously, because now we are used to have fantastic results from chip makers, well, the ASML's disappointment has been a sour taste in investors' mouth this morning. And we actually think that at some point, reasonably, the growth expectations for chip makers will be leveling out. And it's just to see if this is the quarter that we will see these expectations slow down. And there is a possibility that we do see them slow down, and that's going to be able to trigger actually a sizable downside correction in profit taking. But more broadly regarding AI, well, ASML also said that they expect AI to continue to contribute to their revenues, and we do also expect AI rally to continue, maybe not in the same way, because we expect some changes within the AI segment. So what I mean by that is we saw so far the first phase, what we call the first phase of the AI rally, benefit to companies, to chip makers, data centers, cloud businesses, all these companies that do provide AI tools to other companies. Yeah. But we are now thinking that there will be a second phase in this AI rally, which is expected to benefit two companies that actually invested massively in AI technologies and tools, and which should shortly start seeing the return on their AI investment. So I think that even though we see some disappointment in terms of chip maker earnings this quarter, the AI rally is not ready to end.
Ipek, broaden that out to the rest of earnings season for us, because, there's a lot of optimism that AI is already going to be helping with costs, for example.
Well, actually, the AI has been the major talking point, and the expectations are quite high, mind you. I mean, looking at the Magnificent Seven stocks, the expectations around earnings growth of around 40% for the first quarter. That's a huge number. That's still down from 55% printed a quarter earlier. But if we single out stocks like Tesla and Apple, who have been in trouble in the first quarter, the expectation of earnings growth goes all the way up to 80%. So now we are talking about a handful of AI stocks, namely Nvidia, Microsoft, but also Google, and we're talking about Facebook and Amazon. So I think that there is a huge optimism out there, but what we will be really interested in is who within this AI segment is going to be profiting from the AI developments, whether it's going to be the provider of AI tools, or are we going to shift towards, the user of the AI tools.
Ipek, great to have your voice on the show. Thank you. Ipek Özkudeskaya, Senior Market Analyst at Swissquote, giving us the context. Coming up, we're going to be hearing from one company that's all in on AI. The executive of that company is Jamie Dimon. His thoughts on the future of money. This is next. This is Bloomberg Technology. JP Morgan Chase CEO, Jamie Dimon. He makes no secret of his firm that it is all in on artificial intelligence. Now, the head of the world's biggest bank, he's laying out his vision for the future of money in this AI world. He spoke with Bloomberg Originals host Emily Chang about that and so much more in the premiere episode of The Circuit's second season. Take a listen.
The best thing is be prepared for any business. When you think about risk, think about things that can go terribly wrong. Can you survive them? It could be technology, it could be government regulations, it could be literally the weather. If you're a restaurant, that might close you down. If you lose this week's business, you're out of business, you don't have enough cash. So you should think all that through.
Bill Gates once said, banking is necessary, banks are not. To what extent could AI or fintech replace traditional banks?
So I think, first of all, I remember him saying banks are dinosaurs. I spoke to him about it in 1997, and he was dead wrong. He'd probably agree to that. But he's not wrong. The technology changes everything. And if anyone is complacent or arrogant or think that because you have a big position today, you can have a big position tomorrow, that's a mistake. But then you have to define what is banking. Someone's going to have to hold the money. Someone's going to have to move the money. Someone's going to have to raise the money. Someone's going to have to do research, around money. Those services will still be around. And, hopefully we're doing it and using a lot of tech to do a better job at it. But I've always thought it's very possible that some tech thing, disintermediates a piece of that. And I've been writing about, big tech going to our business, we got fintech, but we also have big tech. And they will embed payment systems in there. And some are going to white label banks, kind of what Apple did. They have the right to do that. I'm not against that. I would be against unfair use of their position to dominate us in a business.
Well, Apple is going deeper into financial services. Do you worry about the Bank of Apple?
Well, we're going to compete. So they have a tough competitor, but they hold money, move money. Yeah, they're a form of a competitor. We also partner with them, but I'm very used to partnering and competing with lots of people.
Existential threat?
I don't think it's an existential threat, but I think if we were complacent about it, yes.
That was JP Morgan Chase CEO Jamie Dimon, and right here on set, this is Bloomberg Originals host Emily Chang. Jamie Dimon is kind of one of the most obsessed about people, like high-flying executive, him the person.
Yep.
The Circuit Series 2, that's kind of what's cool about it, is you get people in a chair, but being themselves. How did you do it this time around?
Oh boy, and this was my first time meeting him. It was all about...
In London, right?
In London, and he was just there for a tech conference really quick. It was all about just making the most of every single minute. The handshake, the walk to the interview room, the chit-chat that, before we actually got quote-unquote on camera for, the formal sit-down interview. And, we talked about how many days he's on the road a year, 120 days. We talked about childhood, family. I asked, how do you do it? He was like, what do you mean? How do you juggle it all? And I think he kind of appreciated that question because it's, you normally ask that to a woman. You don't ask that to someone like Jamie Dimon. And he was like, look, I don't socialize. I don't go on red carpets. It's work and family, and that's what it is. And family actually comes first. And so that's kind of where we started, and we tried to open up from there.
You then, of course, peel away not only about his family, and kudos for continuing to ask that of both men and women, but ultimately about how AI is changing his business. You're going to be thinking about AI for the rest of the season as well, I'm pretty sure.
AI is a huge part of the season, as it is a huge part of your show. I mean, it's a huge part of our world. We can't avoid it. One of the interesting questions I had for him is, Chat JPM. Will something like that exist in the future where we could ask, I've got 30 years, what should I do with my money? And he said, essentially, yes, it's already doing that. We've got AI embedded in everything. It's going to learn more and more about you. Will I be able to say to Chat JPM, I want to get rich quick? And he was like, I hope it tells you that you're crazy, because that's just not possible.
Really quickly, what can we expect this season?
Oh, I hope you love it. We're traveling. We're taking you to Latin America, going on Netflix sets. That's sort of the next leg of their global expansion after South Korea. We go to see Mary Barra in Detroit. We spend a lot of time with her and really get to know her behind the scenes. Palmer Luckey, the founder of Oculus, and of course, Anduril now, making drones and satellites, AI and warfare. I hope you love it.
Sure I will. Bloomberg Originals host Emily Chang. You can catch the full first episode tonight on Bloomberg, 6 p.m. Eastern. Caro.
Ed, coming up, stablecoin regulation. That could be coming up next month too. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. A very quick check-in on the markets. And when it comes to publicly traded technology names, I'm taking a look at Tesla, off 0.7%. It's pared its decline, but we're still down for a fourth straight session. We talked about the reasons why earlier in the show with Pierre Ferragu. It's a stock that's below $500 billion now in market cap. And I'm looking for stories. I'm looking for clear downward direction in the market. Tesla was one name that contributes to that. Bitcoin's also really interesting. Actually, during the course of this show, Caro, you highlighted it earlier, but we're now down nearer to $60,000 per token on Bitcoin, a drop of 4% in the session of an asset that trades 24/7. On the Bloomberg terminal, there's a lot of writing about the real-world use case. ATMs in Latin America are becoming more mainstay, but also the industry bracing for the halving. Loads of people saying they're ready, but if you look at some of the technology-related stocks linked to crypto, those are also seeing some downward pressure. And we have other pieces of news from that industry too.
We do, and let's dive in because Grayscale Investment CEO Michael Sonnenschein, he says that the market for US spot Bitcoin ETFs is still relatively new. Hasn't seen wide-scale institutional adoption, at least. In an exclusive conversation with Bloomberg TV, the CEO also spoke about the SEC's approval of Bitcoin ETFs and the long road to regulatory approval. Here's what he had to say.
even though they've been in market now for 3.5 months, we still do not have listed options on spot Bitcoin ETFs. This is a really important feature that investors want and they deserve. This can help investors to manage their positions, manage risk. Ultimately, I do believe that the SEC should be approving these so that they're once again not in a position to be treating spot Bitcoin ETFs disparately from, Bitcoin futures-based ETFs.
Let's stick with regulation, moving on to stable coins now. Amid a push in the House and the Senate to pass such legislation as soon as next month, Senators Loomis and Gillibrand are proposing a measure that would ban algorithmic stablecoins and say their bill would protect consumers in the US dollar while enabling innovation in payments. Let's get out to DC with Bloomberg's Kayleigh Lyons. I saw a headline on the terminal this morning that says the legislation has momentum from one of those senators. Does it?
Yeah, this is an effort by Gillibrand and Lummis, who have had crypto initiatives in the past. They've introduced in the past much wider legislation to kind of set regulatory standards for the industry as a whole. This is a much narrower effort, and perhaps the narrowness of it is what could actually get this across the finish line in a way that other efforts have not. Essentially, what we're talking about here is a framework for stablecoins, as you mentioned, that would ban algorithmic stablecoins. Perhaps the example of an algorithmic stablecoin that looms largest in our head is Terra USD, which, of course, was supposed to be pegged 1-for-1 to the dollar, but instead of being backed by reserves, used smart contracts to try to keep that peg, which worked until it did not, and it collapsed in fabulous fashion with $40 billion being wiped out. So they want to avoid that in the future. What this regulation instead would do is not allow those and require one-to-one reserve requirements for stablecoin issuers. So making sure there actually is a dollar for every $1 stablecoin that is out there. It would set some other guidelines as well as to the authorities that federal and state regulators would have. And interestingly, it also would establish the FDIC as being able to recover lost assets should these stablecoins collapse. Obviously, again, that's probably a product of what we have seen in the past. Will this initiative actually move forward is kind of a question that will be left to the Democratic senator from Ohio and chair of the Banking Committee, Sherrod Brown. He is largely a crypto skeptic, but in an interview this week, he did suggest that he could see this stablecoin measure attached to other measures that have gone through his committee, including safe banking for marijuana companies and the clawbacks of compensation for executives of collapsed banks. So we'll see if this initiative does move forward in the Senate. And I would note as well that in the House, the chair of the Financial Services Committee, Patrick McHenry, along with the ranking member, Maxine Waters, are working on a stablecoin effort of their own.
Yeah, I mean, already meeting with Senator Majority Leader Chuck Schumer about this. Kayleigh, more broadly, how necessary is this for the industry to have some sort of robust set of rules, of guardrails? We've already been speaking with the European Commissioner, for example, about how they've been trying to enforce regulation, and at least it's clarity of some sort.
Yeah, clarity is what this industry is often asking for, Caroline. And certainly this probably does not go as far as the industry would like, but it would address a certain part of it. We've already heard from some industry lobbying groups like the Blockchain Association that they are supportive of this stablecoin effort. And when I have talked to people here in Washington, a lot of them have expressed much more optimism that stablecoin legislation is the most likely thing to get through this Congress versus more wide sweeping legislation that would actually perhaps delineate what, for example, the SEC would have control over versus the CFTC. That has proven a lot more difficult to do on Capitol Hill. We have seen an effort get through the Financial Services and Agricultural Committees in the House that would delineate that regulatory land, if you will, territory for those two different agencies. But that has not moved further. And that really is what would be required much more sweepingly to provide clarity for the industry. And in the meantime, of course, as you all probably know well, based on your crypto conversations here on Bloomberg Technology, the industry really sees that at this point it's regulation by enforcement, and it may stay that way until Congress actually moves forward more substantially.
Kayleigh Lyons, just so thorough with the analysis and getting us up to speed. We thank you so much over there in Washington. Meanwhile, well, let's just talk about the SEC a little bit more. It's blocked third-party messaging apps and texts from employees' work mobile phones. Now, it's bringing its own practices closer to the standards it's enforcing for the industry, and that includes WhatsApp and iMessage. Now, the SEC says it will, quote, lower risk that their systems could be compromised and enhance record keeping. Interesting one, Ed.
Yeah, let's get to another story out of Europe. The CEO of Atos, which has been struggling with tumbling shares and a wall of debt, is confident that the French IT company will be saved. CEO Paul Saller spoke in an exclusive interview with Bloomberg's Caroline Conan in Paris. Have a listen to this.
We are actually working with our creditors, both our banks and our bondholders, for a solution to our high level of debt, and the maturities are coming due in the next 18 months. And the dialogue is very, very positive. We're operating under the conciliation, as you have mentioned. It's like a mediator is helping through those discussions. And I do believe that everybody is aligned. In fact, we recently had secured some liquidity from those same bondholders and banks. Again, an indication that everybody is really aligned to find a solution.
So what else could be part of the proposal apart from this group of bondholders? Are we going to see, for example, some asset disposal announced before the end of next week? Is that a possibility, or do you totally exclude this?
I think what we have presented is a comprehensive plan that included all the assets of Atos. Now we're going to have to see what proposals are going to come through. Some of them will just keep the whole of the company together. One of those proposals is likely to come from one of our largest shareholders. And others will come in from our bondholders who seem to also be interested in keeping the whole company. But we can't just really forego any potential proposal that may come in and may entail a different mix of ideas, such as asset disposal or not.
Will this whole plan be able to save Atos?
Actually, Atos is a great company, as I mentioned to you. It just really is going to be, I do believe that we'll come up with a plan and the company will succeed long term.
So it will be saved?
It will be saved.
Caroline Conan speaking with the Atos CEO, Paul Saleh. Now coming up, we're going to be joined by Menlo Ventures partner Matt Murphy on the firm's new playbook for AI applications. More on that next. This is Bloomberg Technology. Now it's today's VC Spotlight, and we're going to be taking a look at some of the winning strategies, the formulas being used by early AI native enterprise companies, because that's the focus of Menlo Ventures' latest AI playbook. Here to discuss is Menlo Ventures partner Matt Murphy, and you've put out basically the 7 golden rules for generative AI apps. So this isn't the foundational models, but this is the applications which could be built upon these models that can be then used cross-industry or across sales or marketing. What have you learned about the similarities, some of these breakout successes we've already seen?
Sure. Yeah. So I think basically this is the fastest innovation cycle we've seen across many, like mobile, cloud, et cetera. And so what really has to happen to create the foundation for application innovators to move as quickly as they want to is you need the infrastructure side to be built out. So you've got kind of the brain, the heart and soul in something like Anthropic, and then a lot of surrounding tooling to get data into the model, such as an unstructured or a clean lab or Pinecone, which kind of help you curate and get data into the model. So that kind of is well underway, and we feel like we're at a kind of tipping point where the infrastructure stack is pretty well solidified, and now we're really going to see a 10-year innovation cycle around applications that's going to move faster and faster now that that tooling and infrastructure is in place. So what we really took a look at in this report is what are some of the early breakout applications, what have they done differently? And so we came up with the 7 golden rules. So for example, things like having an almost infinite content loop. If you think about a lot of applications before, you basically had to have a designer design creative for each potential campaign. You would then test that, take it back, iterate. The way generative AI works is it can make N different campaigns and actually kind of close the loop and have this constant feedback system. So one of the companies that does that really well is a company called Typeface, which is the former CTO of Adobe. Right. And basically they're recreating the Adobe Creative Cloud with generative AI. So that's one very concrete example.
That's obviously one of your portfolio companies. Sorry to jump in there, but what's so interesting is what sets that particular business apart from others that you're pitched? I mean, you also say, look, you want to see within these AI apps target work that is high value, high volume, or facing labor shortages. So basically, where is AI going to have the biggest impact? What are some of the winning formulas there?
Yeah, sure. So what you want to do basically there's two ways that a generative AI model can work. It can work as a kind of an assistant, call that a co-pilot, where it makes a worker smarter, better, more efficient at their job. And then sometimes it'll actually be able to replace that job and allow a worker to do something else, like a higher value, higher skilled activity. Things like customer service are a great example of that. And you kind of look for these pattern-based, high-volume workflows. On the other end of the spectrum, there are these high-value, lower maybe amount of people workflows, like let's say a paralegal who spends all this time digging through documents and matching terms and things like that, when they could really do the analytic work if a system built that for them. So that's kind of what's being reimagined here with generative AI, is how do you kind of take the bulk work and allow workers to do more higher value add activities on top of that.
Matt, I'd like to discuss how backward or forward-looking your report is and how crowded the field of activity is in this space. I would say that Caroline and I talk about companies and platforms targeting developers and apps quite regularly. An example being Salesforce and the App Exchange, right? They have brought in a generative AI layer to their existing products. Just how busy is it right now in what you see happening?
Yeah, I mean, it's extremely busy, right? I mean, so if you look even anecdotally at our portfolio, over 50 companies, early half of last year, maybe 20% of companies were doing something with generative AI. Now it's pushing up against 100%. And I think that's a good proxy for what's going on in the market. If you're an existing software company that's not doing something with generative AI, you're falling behind. So that's one wave. But frankly, the wave that we're most excited about is people kind of rebuilding from the get-go now with new capabilities of generative AI, like a couple that I mentioned, because the most creative and innovative way to disrupt applications is to kind of start with a founding team that has the DNA around AI and thinks about how to build the application from the bottoms up that way. Whenever you bolt something on later, it's beneficial, it's additive, it's going to be great for Salesforce and other companies. But when a new company comes in and says, hey, if you could just, this application shouldn't even exist without generative AI. I can give you an example. If you'd like, for example, take a company like Elios, which is doing kind of a generative AI for a therapist conversation. So you can listen to the conversation, use your own model to kind of parse that and give doctor notes, as well as a potential diagnosis, and use generative AI to package that up and curate the content that comes out of that. These are kind of capabilities that a model was never able to process before, nor synthesize it down to something as precise and important as a diagnosis.
Matt, one of your bullets is build where incumbents aren't, can't, or won't. But, you know, in the history of Silicon Valley, often something gets built because a founder realizes there's a problem because they were at another tech company where they were frustrated by something. Do you have any sense that the end markets actually know what their use cases are yet, how they're supposed to be using generative AI in whatever it is their business does?
Well, I think that's kind of my point, is like, I think everyone knows that generative AI is a great writer. It can take all the content you have, synthesize it down, and help people get through it really quickly. If you've got a graph or a set of output, you can distill all that down, and it makes it so much more effective for the user to consume the output of your application. But that's kind of table stakes. The things that, again, we're most interested in is how are you using that technology to do make the application completely different than what the incumbent has done in the past. And that's really the opportunity lies here. I've seen a bunch of examples of that in the legal vertical. That's a fast mover out of the gate in areas like that. I already mentioned customer service. So it's just different when you say, let's change the entire workflow versus bolt on the capability after the fact.
Menlo Ventures partner Matt Murphy, thank you very much. Caroline.
Yeah, let's have a quick check on talking tech. First up, Toshiba is seeking to cut 5,000 jobs, or roughly 10% of its headcount in Japan. That's what the Nikkei is currently reporting. Now, the move could initiate one of Japan's biggest rounds of staff reductions this year in a country that has some of the world's strictest worker protection laws. Plus, Apple is weighing the possibility of making some of its gadgets in Indonesia. Now, the iPhone maker has been exploring production bases beyond its longtime stronghold of China, of course. That to minimize geopolitical risks as tensions they rise between the world's two biggest superpowers. And business software startup Rippling Well, it's reported that it's in talks to raise new funding at a valuation between $13 and $14 billion. And the company, we understand, is planning to raise about $500 million in a deal, according to sources. The talks with investors are ongoing, with plans to finalize terms within a few weeks. It might be said that Rippling so far has denied some of those reports. Ed.
Coming up, we're going to be joined by the CEO of carbon capture tech company Zante. That's next. This is Bloomberg.
So the BloombergNEF Summit, it's in full swing right here in New York, convening leaders in energy, industry, transport, technology, finance and government to discuss just how to shape a cleaner and more competitive future. I'm pleased to say we're speaking to a person who's doing just that, Claude Letourneau, he's CEO of Zante, fresh off his panel from the summit. And Claude, what's so interesting is you are providing the technology, the filters, the ability for companies, such as, say, manufacturing makers, to carbon capture. How?
Well, we kind of focus on a problem that was stated 135 years ago by a fellow called Zante Arrhenius, and we took the name Zante, similar to Tesla, if you wish, on the EV. So we're a unicorn and focusing on carbon management by providing solution to avoid CO2 going out in the atmosphere in the first place, industrial factories, cement, pulp and paper plants, or even removing the CO2 from the atmosphere that's already above the ground. So we are working in that case with a company called Climeworks, and we provide the filters inside the contactor that they have to collect the CO2 from the atmosphere.
Yeah, you built a lot of partnerships. You're working with a lot of companies and emitters. How long a time frame is it to build such, to manufacture, to actually get this going when you know that one of your clients wants indeed action this?
So our legacy is that we're 16 years in research in developing the technology, the product proving out in the market, and raising all these partnerships to get there. We've raised $500 million to get to the point where we are, and we're currently building a factory to make the filters that will be able to equip the equivalent of 10 projects of 1 million ton. The world needs to get to 10,000 plants of 1 million ton in the next 30 years.
Wow.
So this is factory number one for us. And we're almost there in terms of building up the capacity to deliver projects. So now, when you look at the specific project with one emitter, normally it takes about almost 2 years of discussion, studies to evaluate how we're going to integrate the capture project into, let's say, a cement factory or pulp and paper plant. And then it takes 2 years to construct. So these projects take a certain amount of time to deploy. And imagine, we need to deploy it at a rate of 2 capture plants every week for the next 30 years.
Wow.
Claude, your 2022 Series E, $318 million led by Chevron's venture arm. I remember 2021, 2022. There was a lot of energy, pardon the expression, behind your industry and financial backing. Have things slowed down in terms of corporate interest and public commitment to what you're trying to do?
Well, your question is twofold. One, the corporate commitment has been there, and it's growing as well. I think the support we got from the oil and gas industry, and primarily led by Chevron, is instrumental in us being here today, be able to talk about carbon management. But what's missing now to grow the business at the scale that needs to be done is we need the private equity infrastructure funds to come to play. And so far, they never come to the valley of death of early startup companies and help them to deploy. So this is something that we're working on these days to bring the two together, because it's the sum of the financial sector plus the corporate that will make this thing work. Now, from a consumer point of view or the public acceptance, I think that it's a slow process. And the analogy I can give you is we've been throwing CO2 in the atmosphere freely for the last 100 years with no consequences in the minds of people. The analogy is the waste management. At the same time, your rubbish at home, the waste management, somebody collects and transport and recycle and store your rubbish. That's because it smells and you can see it. You cannot see and smell CO2. So it's very difficult for people to associate the carbon management industry needs to exist.
Right.
And the price of collecting your rubbish is about $150 per ton of CO2 equivalent. So
Claude, we wish you had more time. Claude Letourneau, his CEO of Zante. That does it for this edition of Bloomberg Technology.